Bonds India as the AVP Finance. He has all his experience in investment banking, private equities, and fixed income markets. Handing over to Bharat again.
Oh, thank you, Alisa. So here we are going to start with our session here. And I would like to put up the first question. And this question is with Ami. And the question is being asked by, wait. Okay. So the very first question is, does investment in bonds is reliable for liquidation of cash in view of bonds market growth in the secondary market? And this question is being asked by Mr. Harsh.
Hi,
Over to you,
Harsh.
Ami.
Yeah, hi. Ami here. So Harsh, basically bonds are tradable instruments. Depending on the type of the bond investor buys, the liquidity of the paper would differ. Certain paper will be more liquid compared to other. For example, like NABARD, PFC, REC, those kind of papers will be more liquid in comparison with papers like IIFL, India Bulls or Edelweiss. So it totally depends on what sort of paper you are looking to invest, and the liquidation of the paper depends on that. But if you compare the returns, then the paper which are less liquid will have a higher return than the papers which are more liquid.
Okay. Thank you so much, Ami. And now the next question is from Mr. Trideep. And the question is, what bonds are available in the market with the following criteria? AAA rating, secured, having a 5-year of tenure, more than 7% of interest, option for monthly and quarterly payout.
Yeah, hi. Basically, see, there are paper like Bajaj unsecured 2027 paper, which is giving indicative around 7.05, 7.10 kind of a yields. Then PFC 2031, which is secured. But it's not monthly or quarterly, but it's an annual interest payment over there. If you're opting for papers which you want like monthly income, like monthly interest, then you may have to go to little lower notch of papers which are currently available in the market.
Thank you so much. Ami, I believe your query has been resolved now. And now moving on to the next question. And this question is about short-term gainer bonds with use value. And this question is being asked by Miss Archana.
Short-term, sorry, can you repeat the question?
Short-term gainer bonds with high value. That means any short-term bonds with high value.
So if you're looking for 1.5 year horizon, then you have papers like 10% UGRO November 23, which is giving around 10 quarter plus yields, effective yield right now.
Okay.
Yeah.
Now moving on to the next question. And this question is for you, Mr. Mayank. And the question is from Akarshit Agarwal. So RBI is going to increase the repo rate to pre-COVID level in near future, which means fixed deposit return will be 8 to 10%. Then bonds are riskier and return needs to be correspondingly higher, which will make bonds cheaper to give more yield to future investors. Over to you, Mr. Mayank.
Hey, so the RBI repo rate and the policy rate changes that are already done and they're already incorporated. So in the near future, when I say near future, the coming up to 1 or 1.5 years, the chances of FD rates going up to 10% from banks like SDFC, SBI are pretty much less. And bonds in by any case. So bonds will always trade on a 100 to 200 basis higher yield than FDs. Because of bonds nature itself, bonds will always be giving you a higher yield. And if you choose bonds which matches your risk appetite, So they will always give you a higher return. And if you are buying FDs from banks which are not well rated in market, for example, any cooperative banks such, they will offer you FDs at 10% or something. But in that case, you can always have a triple B or double B rated bond to match the risk appetite, which will give you a considerably higher return.
Thank you so much, sir. I believe, Akarshit, your query has been resolved. If you have any more query, just put up your question on our chat box. We will get back to you. So moving on to the next question. This question is from Mr. Vibhor Jain, and he is asking about bond safety, especially in terms of finance company. How to find out? And over to you, Mr. Mayank.
Yeah. So bond safety per se. Okay. So bond safety per se, you can define by the credit rating of the company, the periodic evaluation by credit agencies, the disclosures made by the companies to SEBI and the exchanges. So you will have to the particular what specific terms in safety are looking for. You have to define that first. So you can see the company is paying regular. If it's a listed company, is paying a regular dividend or no. Is the company regularly paying interest obligations, redemption obligations or no? So there are multiple factors in that. So ideally, for a common person, I would say you can just see if there is any credit rating changes in the for the security or not.
Okay, thank you so much, sir. And now moving on to the next question. And the question is from Mr. Rameshan. Which is the best bonds I can select for long-term investment? Over to you, Mayank sir.
Okay, so long-term investment, this would be a very big question to answer in a short time. But yeah, it definitely depends on your risk appetite and what are your future goals. If you're ready to take a higher risk, then you can move to private bonds for 10-year, 12-year period. But if you want a secured paper or something, you can definitely use PSUs and PSUs at G6 or any government bonds.
Okay. So moving on to the next question. And again, this is for you, Mr. Mayank. And the question is from Arun Das. How to invest in best bonds? Let me clarify. Okay. So here, Mr. Arun, I will tell you, you can visit our website and connect with our team for the investment purposes. We will get back to you one-on-one for this, okay? So next question is from Mr. Deepak Keshan. Which funds should one choose in the current scenario? And over to you, Ami ma'am.
Yeah, hi. So in current scenario, basically, again, as Mayank explained you, it totally depends on your portfolio. So if your portfolio is having risk appetite, you can go for A plus kind of papers, which are like you grow, and if you want even double A plus kind of paper, you can go for India Bulls, Piramal. Or if you want to have more secure papers, you can go for PFC, REC, tax-free bonds, papers like that. So it depends on, and you can choose between, like, if you want private bonds or you want PSU bonds, SDLs. There are many options available these days. So it totally depends on your appetite. Secondly, I would like to say that in the rising interest rate scenario, like right now we are experiencing, you can opt for a low duration like bonds. You can go for a lower duration bonds, which will having less risk in terms if the interest rate is changing, if moving up.
Thank you, Ami.
Yeah.
So moving on to the next question. And the question is, which type of debt funds to consider with limited or less risk of capital loss to avoid principal loss or default risk? This question is from Mr. Madhusudan. And over to you, Ami.
Yeah, so you can go for a secured bonds, AAA rated bonds, and a good track record of a company. Like, you can go for companies which have not defaulted, like Bajaj and HDFCs and all those kind of papers, where the track record is good. And I mean, the papers like 81 bonds, like perpetual bonds, they are least preferred if in case there is any default happening in the banks or something. I mean, they are less I mean, they're not paid before the tier 2 bonds, so you have to consider all those things and then invest accordingly if you're considering bank bonds.
Just to add to
The
Ami's,
seniority of the you have to see the seniority of the repayment of those bonds in case of default.
just to add to Ami's answer, so given the current scenario of interest rate hike which is expected in the market, it is better to invest in low to medium duration bonds, because if you invest right now in a mutual fund, in bonds you can fix the yields and what you're investing. In mutual funds, that is not the case. So in the current interest scenario, bonds, mutual funds which are of a low or medium duration, that is more preferable to invest rather than a long-term fund.
Thank you so much, Amy and Mr. Mayank. I hope the answer, you have got your resolution, Mr. Madhusudan. Now moving on to the next question, and the question is from Mr. Philip. What would be more profitable, buying from market or apply for a new issue? And over to you, Mayank sir.
So it totally depends on what bonds or which issue you're looking at. So if it is a PSU issue, or it is a let's say it's a very large issue, AAA issue, so it is preferable to get it from the primary market, because as soon as it lists, ideally given the track record in the last 1 to 2 years, papers like PFC, REC, these private issues are traded at a premium the moment they are listed. So in case of those papers, it is preferable that we buy them in the private market, in the primary market. Else, it is actually a neutral option on what you buy, what you do, what you want to buy it in primary or secondary. Ideally, primary is preferable.
Thank you so much. And now moving up to the next question. And the question is, how do we evaluate the right price of the bonds once it is listed in the exchange? How liquid are these bonds? And this question is being asked by Mr. Zafar Ali. And over to you, Mr. Mansa.
Okay, so how do you evaluate the price of a bond? Price of a bond for retail investors specifically, I'll be front. If your expected rate of return matches the yield that you have delivered, the yield that is delivered, then the price is right for you. To put it in the simplest terms. Otherwise, if you want a technical analysis on that, then you'll have to see what are the last similar rated papers, similar category papers at what they are trading at, which are listed in the exchange. How liquid are bonds? The liquidity of bonds depends on what kind of bonds you're buying. So there are some bonds which are extremely liquid. There are some bonds which you might face a trouble in selling off. But in that case also, if you we do have an option. We have an option that Bonds India especially has an option that we offer to buy bonds which are not liquid as well. So in case you wish to sell any bonds which you might feel are not liquid or so, you can definitely reach out to our teams and they will offer you the best price possible in the market.
Thank you so much, sir. I believe Mr. Jafar has got his answer. Now, moving on to the next question. And the question is, how is possible to create sustainable income from bond market? And this question is being asked by Mr. Sanjeev. And over to you, sir.
Sustainable income is more of an individualistic question. So for some people, a regular income is a sustainable income. For some people, a capital gain or a lower rate of interest is a sustainable income. So general categorization of same is difficult. However, if one does a due diligence and invest in a good credit quality paper, when I say credit quality, basically it means good credit rating that matches your risk reward ratio, then it can help to achieve your financial goals. So you can define what risk reward you wish to see. So ideally for a retail investor, anything which is rated between an A and a double A plus gives matches the retail investors credit risk requirements and delivers a good return as well.
Thank you so much, sir. Now, moving on to the next question. And the question is being asked by Ms. Deepika. Which type of bonds are majorly issued by companies? Over to you, answer.
So by companies, I presume Ms. Deepika is asking corporate or private bonds. So corporate and private bonds will be basically secured bonds, unsecured bonds, perpetuals, market-linked debentures. So these are basically, you can define them based on their security or the tenure or how the returns are calculated. So for example, in a secured or unsecured bond, there is a security defines what kind of bond it is. In a perpetual, I mean the bond that there is no defined redemption date of the bond. There are, however, call options in it. Market link, another type of bonds would be market link debentures, where there is no specific defined rate of interest. However, the returns will be defined by the underlying security. So for the returns will be based on that particular security in the market.
Okay, thank you so much, sir. I believe Ms. Deepika has got her answer. Now, moving on to the next question. And the question is from Mr. Mukul Trivedi. Best recommended bonds with 9.50% return with monthly, quarterly interest, or any other best scheme for senior citizen 75-year plus. Over to you, Amy, ma'am.
Yeah, hi. So if you're looking for monthly or quarterly interest payment option, there are few bonds which are available. Generally, bonds are issued with the annual or semi-annual coupon, but monthly and quarterly, there are few bonds like IHF, CL, then APCRDA, which gives you quarterly interest payments. Then there's UGRO, which is giving you quarterly options. There's UP Power Bond, which is giving you quarterly. Muthoot FinCorp 2027. These are the bonds which are giving you monthly and quarterly options, and the returns are also 9 quarter plus, depending on the paper and the credit rating.
Okay, thank you so much, ma'am. And now, moving on, before moving on to the next question, there are some generalized questions like how to invest in bonds, like from Mr. Rajendran. And the question which just Mr. Mukul had just asked about how to find the bonds having this kind of return. So I would request you to please visit our website. We will put our website link in the portal link into our chat box. Just visit there. We will get back to you with the best possible answers. Now, moving on to the next question. And the question is from Mr. Narayanan. How to buy bonds trading at a discount? And over to you, ma'am, sir.
Okay. So I believe the question that Mr. Narayanan was asking is how do you find bonds which are trading at a discount? So to put in a very generalized term, if the coupon or the rate of interest that a bond pays is lower than the yield at which the bond is trading, so that particular basically means that bond is trading at a discount. And in case the market levels that you watch, so if you see on a screen, a bond is trading at, let's say, 1,050 rupees. So out of that 1,050, you'll have to see what is the accrued interest component. So out of 1,050, if 100 rupees is the accrued interest component, then that bond is actually trading at a discount of 100 rupees. 50 rupees, I'm so sorry. So basically, yeah. So yield and accrued interest component, the price is quoting of the bond is basically how you find out what bonds are trading at a discount.
Thank you so much, sir. And now moving on to the next question. how to find the track record in case of bonds issued by a state government authority, guaranteed by a state government, and the bonds issued by the state government themselves. And this question is asked by Mr. Praveen, and over to you, Mayank, sir.
Okay. So Mr. Praveen, discussing the entire track record of state guaranteed bonds would be a bit difficult in this scenario. But yeah, in the current times, the state governments have come up with attractive guarantee assurance schemes to help PSUs and PSUs. So in the recent times, in the earlier times, the guarantee used to kick in like 6 months, 8 months, and getting a short timeline was not fixed. But in the recent issuances like UP Power, APCRGA, or any other state guaranteed bonds which are recently issued, the state governments have in the information memorandum of the bond itself have defined the timelines. So, for example, in the state guarantee kicks in on the day of the default, and within X number of days, which is typically less than 15 to 20 days, the state government will ensure that the bonds are repaid and the state guarantee kicks in. So yeah, state guaranteed bonds in the recent times have come up with a very attractive guarantee assurances, which actually helps retail investors.
Thank you so much, sir. And now moving on to the next question, there is a live question from Mr. Manish. Why one should invest in AAA or AA plus papers when government securities are available at the same yield? Over to you, Mayank, sir.
Okay, so AAA, AA papers and government securities. So the government AAA, AA papers right now are trading in depending upon the tenure and the issuer at the range of approximately 8 to 10%, and a credit and a tenure of 5 to 10 years. So the GSECs currently, which is 10-year GSEC, which is currently 10 years 7.25 to 7.5. So there is definitely a risk reward ratio. The AAA bond with a lower maturity is giving you a higher return than a GSEC, which is giving you a lower return and a higher duration. So in a general market, if an investor prefers a better risk and reward ratio, a bond of a AA or AAA rating is always preferred over a 10-year GSEC if it meets the client's risk ratio. Bharat?
Hello. Yeah. I believe there was some technical glitch. So thank you so much for your answer. So now moving on to the next question. And the question is, in the current interest raising scenario and the company's debt burden will be raising, which bonds one could invest with good yield and security? This question is being asked by Mr. Pawan Kumar. And over to you, Amy, ma'am.
Yeah, hi. So in the rising rate scenario, it's always good to invest in, as we have already discussed, low and medium duration bonds, because more the longer the bond, it is more sensitive to the interest rates. And suppose the rates are going to increase, like we are expecting maybe GSEC to move towards 7.75 or 8 in the near future, it will definitely affect the pricing of the bond. So you have to select the low duration and medium term duration bonds. And in terms of security and that, you have to go for the bonds which have good ratings, and you have to go for companies which have a good cash flows, which are cash rich companies. Prefer investing in shortlisting those sort of companies.
Thank you so much, ma'am.
Because
I believe
treasury bonds generally have only one risk, I mean not just one risk, but the main risk is the interest rate risk. So you have to select the duration right.
Thank you so much, ma'am. And I believe Pawan Kumar has got his answer. If you have some more queries, just put up your contact details in our chat box. We will get back to you. And now moving on to the next question. What will the rate of return each year, and how will I will be taxed for investing in bonds if my income falls in 0% tax bracket? That is the income less than 2.5 lakhs per annum. and the question is being asked by Mr. RK. And over to you, Ami.
Yeah. So basically, in short-term investment in the listed bonds is taxed at 15%, and long-term is 20% with indexation, 10% without indexation. So if you are falling in those brackets, it depends on that. And if you're not falling, and your income is less than 2.5, so it depends on how much you are investing, what sort of interest you have got, and on maturity, how much is the capital gain which you have gained in that. It will be calculated accordingly.
Okay, thank you, ma'am. And just moving on to the next question, what is the shortest period of investment? And the question is being asked by Mr. Sanjay. And over to you, my answer.
As such, there is no shortest period of investment. I mean, you can do an intraday trade, you can do a switch within a day or so, or you can sell the stocks if you're buying on doing a transaction on screen on the exchange directly itself. So you can trade within 3 days or something. So there is no concept of shortest duration of investment. Yeah, if you want to go for a redemption of paper, then ideally most of the papers come with a 15-day record date. So in that case, the shortest investment will be 16 days.
Okay, thank you, sir. Now moving on to the next question. The question is NCD Safe difference between AAA rating and BBB rating? The question is from Mr. Sanjeev Kumar, and over to you, my answer.
Okay. This question I'll split in two parts. The first part is NCD safe? Like any secure money market or securities market instrument, NCDs by default do have an inherent risk, but these can be negated by looking at the credit ratings or during a due diligence in the papers itself. So if you ask me in general questions, are NCDs safe? Yes, there are conditions apply that you will have to do your due diligence before investing. I mean, you cannot invest in a paper which is already defaulted and then assume the risk, assume that it's already safe. But yeah, in a general scenario, NCDs in the current investment market are safe. What is the difference between a AAA and a BBB? Okay, so credit rating, there are a few steps in or ranks that I would say which are allowable. So the hierarchy in which the credit rating works is the highest credit rating is a AAA, then comes your AA plus, AA and AA minus. Like that, after AA will be A, B, BBB. So in that scenario, the credit rating works. So I mean, AAA and BBB, these are credit rating that have been given to a security. So the highest rating is BBB and the lowest rating will be a D rating, which is basically a default rating.
Thank you, sir, for your answer. Now moving on to the next question. May I know in details on what is yield to bond and the difference between the coupon rate as well as what are zero coupon bonds? And this question is from Mr. Vimlan, and over to you, Mans.
Okay, so I believe the question that Mr. Vimlan is trying to ask, what is the difference between yield and a coupon rate? Okay, so a coupon rate is like a rate of interest. So if you are buying a bond of ₹1,00,000 face value, then the coupon rate is the rate at which the issuer will pay you an interest. So the coupon rate is nothing but your rate of interest, similar like what you have in FDs. Now, yield to bond. The yield to bond basically means if you have bought a bond at a premium. So let's assume ₹1,000 bond you have bought at, like, let's say 1,050, but the rate of interest that you get from the issuer will be on 1,000. So your effective rate of return will be less than your coupon rate. So in this case, my yield will be my rate of return that I'm expected to earn from that particular bond. As far as zero coupon bonds are concerned, zero coupon bonds are basically bonds that are redeemable at the face value, but instead of paying interest, the issuer issues these bonds to investors at a discount. So let's assume instead of paying interest, you're getting a bond at a discount which is being redeemable at par.
Thank you so much, sir. Now, moving on to the next question. How can bonds to be used as an asset to generate income to take care day-to-day life? And this question is from Mr. Vikas. And over to you, Amy ma'am.
Sorry, can you repeat the question?
Sure. The question is, how can bonds be used as an asset to generate income to take care day-to-day life?
Yeah, so the basic nature of a bond is to give you a regular interest payment. So that is one thing. In terms of if you have other investment options like equities or gold or all those things, you never know where the market will go, how the returns will be. At least in terms of bonds, you know that your interest is going to be fixed at particular intervals. So, and you also know that what will be the maturity amount. If you're buying a normal coupon bearing bond, if you're buying a deep discount bond, then you know how much you're investing right now and what amount you will get after a certain period. So this is how you have to evaluate a bond, and how do you want your future cash flow to be. You have to invest in those kind of bonds.
Thank you so much, ma'am. I believe you have got an answer, Mr. Vikas. Now, moving on to some questions from our live questions here. And the question is from Mr. Krishna Shah. He's asking, I have UPPCL bond which will expire in 2024. I had bought it from any vendor and now it is in my Demat account. So can I sell it from my Demat? And what will be the best time to sell it after getting interest of 1 quarter? Over to you,
I'll take that question. So, Mr. Krishna ji, this PCL bond that you have bought, so you can sell it from your own Demat. You can sell it to anyone who has. You can trade on ICCL or any other platforms. If you want, we will ask our team to get in touch with you on how to proceed the sale. Basically, you will have to give your broker DP sell instructions to transfer the bond to the buyer, and so you'll be able to sell it from your own Demat. Your second part of the question was, what is the best time to sell after getting interest of 1 quarter? So even if you sell it before receiving the interest from the issuer, at the time you sell the bond, at that time you will receive whatever interest is accrued on that particular till that particular date from the seller. So even if you don't receive interest from the issuer, you will get it from the seller.
Thank you so much for your answer, sir. And I believe Mr. Krishna has got his answer. And now moving on to the next question. And the question is from Mr. Sandeep. What is risk involved in unsecured bonds? Over to you, Amy ma'am.
Yeah, so as I said earlier, the unsecured bonds are the bonds whenever a company or the issuer defaults, they are given the least priority when the liquidation happens. When the bonds which are secured or senior are given the first priority to be repaid when the assets are sold off. The unsecured bonds will have the last priority. So whatever will be remaining amount after being paid to the secured investors will be paid to the unsecured investors. So those are the risks involved in buying an unsecured bonds.
Okay, thank you so much. And now moving on to the next question. And the question is from Mr. Nitesh Bhanushali. If I have bond already in my Demat, will Bonds India help in selling it? Over to you, Max.
Yeah, definitely, sir, we'll help you in selling it. In fact, one of our goals is to ensure that retail investors get liquidity in bonds so that they not get stuck in it. You can definitely reach out to our teams via online website, or you can call our helpline numbers, so they'll help you with that. The moment you send us a request that you wish to sell this particular bond, our team will give you what are the best possible options and what is the best possible price that can be offered, and accordingly you can take a call.
Thank you so much, sir. And now moving on to the next question. And the question is from Mr. Manish. If call option is not exercised in perpetual bond, what will happen? Over to you, Amima.
Yeah, so basically the issuer have a right not to exercise the call option. Depends on the interest rate scenario at that point when the call date comes. In perpetual bonds, basically there is no maturity. So the interest rate date on the interest date, you will keep on getting a regular interest payment over there. The bond will keep on, the issuer will keep on giving you the interest at the regular interval over there.
And now,
just to add to that, Ami's answer. So in perpetuals, in case there is a call is not the company is not exercise call option on a particular date, there are terms in the information memorandum wherein once a call is expired, the call can be exercised at a later date. So there are multiple issuers in general keep couple of call dates in their IMs. So ideally, the first call date from today will be considered as the call date, and the bonds will be trading at yield to call on that particular trade. So call options, for example, I have not exercised my December 22 call option. So in case I have in my information memorandum, I might have a scenario in which there can be a December after December 22, there can be a December 23 call option.
thank you so much, sir. Thank you so much for your answer. Now, moving on to the next question, and again, the question is being asked by Mr. Krishna. So I can roll over, if I can roll over to next long duration of UPPCL bond, how safe will be UPPCL bond in coming years after having such a global situation of economy? Over to you, Mayank, sir.
Okay. Right now, going long is generally not preferable. Going for longer duration papers actually is generally not preferable given the interest rate scenarios which are changing. But yeah, if you're getting a paper which meets your return obligations or your return requirements, let's assume you're getting a long paper at a 9% or 10%. If it meets your requirements, then it does make sense to buy it, because actually whatever yields you expect, if you're getting that return, then it is comfortable for you. And global scenarios and UP Power, I mean, there is no connections per se about the global scenarios and UP Power papers. But yeah, if it meets your risk reward ratio, you can definitely buy it.
Okay, thank you so much, sir. And I believe Mr. Krishna has got his answer. If you have any further queries, sir, just put up your question in the chat box. We will get back to you. And now moving on to the next question, and question is from Mr. Bajaj. He's asking about, is GST applicable while purchase and sale of the fixed income securities? Over to you, Amima.
Yeah, Mayank. Yeah, Mayank.
Okay, so GST is not applicable on buying or selling of bonds. Hello. Hello. Am I audible, Bharat?
I believe.
Hello. Okay. But so GST is technically not applicable on buying or selling of bonds.
I believe there is some technical glitch.
Can you hear me?
Now, moving on to the next question. And the question is, people who has short-term investment of 1 year, just like RD in post office, do you have any suggestion to invest? And the question is from Mr. Deepti. Over to you, Mayank, sir.
I'm so sorry I couldn't get the question. Can you please repeat the same, please?
But can you please repeat the question if you could?
I think there is some technical glitch with the Bharat. So, Mayank sir, would you please continue to answer the question?
Okay. But I couldn't get the question. If you could repeat the question, please.
Okay. Now I think my voice is audible to all of you. Sorry
Yes,
for the
yes.
inconvenience.
Yes, your voice is audible, Bharat. Please continue.
Yeah. So the question is from Miss Dipti. She's asking people who have short-term investment of 1 year, just like RD in post office. Do you have any suggestion to invest?
Yeah.
Over to you, Max.
So there are many bonds which with a tenure of a year or a shorter term tenure. So basically, you can buy them from the secondary market. Ideally, those bonds will not be available in the primary market or an IPO. Shorter term bonds with a good credit rating. I mean, you can get in touch with the team. They will definitely help you in getting those bonds. And just like an RD, you can do an SIP in bonds. I mean, you can speak with any consultants or something and do a regular investments in bonds also.
Okay, thank you so much for your answer, sir. And now the next question is from Nitesh Vanusali, and he is asking what all charges one need to pay on buy and sell bonds in secondary market. What if it is OTC trade?
Okay, so if you're buying a bond on ICCL platform, so over and above what the price that you're buying the bond, so there will be a component of principal, there will be an interest component which will be paid. These both components you'll be paying to the seller. Over and above that, you will be paying a stamp duty, which will be retained by the exchange. So on a 10 lakh transaction, the stamp duty is 1 rupee. So this is what you have to pay as an exchange charges. And there are no other charges if you do a trade on ICCL. If you're doing a screen trade, then whatever rates you have negotiated with your broker, the broker will apply that brokerage. Apart from that, exchange transaction charges, stamp duty, etc. will be charged.
Okay, thank you so much, sir. I believe Mr. Bhanusali has got his answer. So there were some more questions here from our participants, and I request them to just get back on our chat box with their contact and their email. We will get back to them. These are the questions which will cover you one-on-one. So I believe we have answered most of the questions asked here. If you have any further query, if you have any further question, just put up your question in the chat box. I will get that question here for you.
But there's a question from Mr. Bajaj again. So let's answer that first. Mr. Bajaj has posted again. So Mr. Bajaj, there is no GST applicable while purchasing and selling of a bonds. Uh, Basically, GST will be applicable on the brokerage that is being charged to you. Per se, if you buy a bond, you are not required to pay anything over and above the principal and accrued interest to the seller and the stamp duty to the exchange. If you're doing an ICCL trade, if you're doing a screen trade, then whatever charges your broker applies, that is to be paid.
Okay, thank you so much, sir. So now it looks like we have covered all of our questions. And if there is anything else you wanted to get answered, please type in the chat box. We will get in contact with you. So now over to you, Alisa. I believe we have answered all the questions here of our participants. Rest, we will get on touch with you one-on-one. Okay, I believe there is some issue today. So I would like to thank you everyone here who all showed their patience. for this lovely Q&A session. I hope you have got all your answers. You had several queries, and we were uh, good in giving you the reasonable answers for the same. So thank you, everyone. We appreciate you being here. And thank you so much, Mr. Mayank sir and Ms. Ami ma'am.
Thank you.
And I hope we will see you in our next session as well. We will get back to you in our next session with some more questions.
Thank you so much.
Thank you.
Thank you so much.